Hello? Oh, welcome back guys to another stream. You guys are doing great. Without further ado, let's get started. Hopefully the audio is a lot better. Interesting day, as you know. Uninteresting day yesterday. Basically did nothing, and that was par for the course. Again, Monday and Tuesday was just prep for this today. Because remember, I mean, ahead of sort of interest rate announcements, they don't want to let people go too wild. So I mean, we'll look at Bitcoin in terms of on Bookmap and we'll see what it did. Other than that, nothing really too much to talk about from yesterday. Just pretty much pretty blasé. Load. We can see here, yesterday we talked about this wall coming to it. We ended up hitting it, then going down some, and you can see where we did go down. We went down into sort of this area here. We set our sort of New York range low here. That's where the wall was. Then we hit into the spike here. Just stop out that 50% range and take the liquidity sort of that would be present here. So it's a nice little side where it's just a little bit of overhang. They're just trying to grab as many orders as they possibly can do before they sort of push on, before they pushed on upwards. And you can see how on this breakdown on this low, it was spotty in the sense that they weren't really going too heavily long, but at the same time, you can see the longs coming in on this side because they realized, there's too many people short. By the time we hit here, they will probably be taking profit, so that will be lost money or lost bids or whatnot. And after they hit that, they ended up going for the high of the range as well, so they ended up taking both low and high, then consolidated between 50% of that. And you can see the break line very clearly if you sort of zoom right the way out into sort of today. There we go. There's your break line essentially here, where you have your shorts below and your longs essentially accumulating above. You can see every time they sort of successfully taken some of these stops out, very sort of fast movements to take these guys out. Now sort of like building a slow grind upwards. Ideally, we want price to sort of tend upwards on the sort of opening bell, just to sort of satiate the fact that we'll potentially go down onto today. Because essentially we are looking for worse off numbers. I mean, UK came out with their numbers already. So we'll look at UK's numbers right here. UK's forecasted was 9.7. They ended up hitting 10.4, an insane sort of increase. So we can probably expect similar sort of tone to come out from US, considering, as well as the fact that the sort of European Central Bank did similar things where they had a rate hike. So we're looking at that and we're seeing that US, they're probably going to raise those rates because inflation's sort of uncontrolled. So looking at that and saying, it's potentially looking pretty bad for us. So we want to see essentially longs being accumulated, and it is in the right sort of quarter sort of say that, because again our weekly range changed none yesterday from Monday because Tuesday just traded within, and we're just trading in that sort of premium territory. And again, that premium territory is split up with the other sort of 50%. Good morning. Here to here, you can see that nice little split at that 50% where we have those closes, and where we have these wicks that are trapped short. We have this area trapped short in Asia, and below here short as well. So you can see every sort of collection was either at the previous or above the previous sort of area where it did collect shorts, so they're collecting new shorts on top of shorts. So it makes an easy sort of way to sort of raise price without sort of costing too much for them. Get rid of this. Actually, no, we'll make this a shallow one. And right now, today's 5x. Yes, finally. Like it's waiting's fine and all, but it's such a bore. There we go. 50% up, then down, or down then up. Depends. If you go up first, then it's down. If you go down first, then it's up. Essentially, it's like we say before, with all other news releases, just do the blooming opposite. Because it hasn't steered us wrong. Essentially, because again, you're just looking for signs of a build-up of retail traders or a build-up of traders prior to the news, because they'll let people go a certain direction in order to make as much as money as they possibly can do. Hehe. Because again, it's all about making money, even in sort of points where prices are or the economic are not really doing so hot, and prices take a slam. Oh, it's easy, quick and easy at last. Yeah. So you should. I mean, worst case you get whipsaw. We know how to sort of trade whipsaw. It's just, again, you just grab the tail end when you're at that support level, and you just counter trade the direction. Essentially, it's most of today will be counter trading. We do have a bunch of longs being built up. We do have short-term sort of traders trading short, so we can easily raise the bar a bit higher and grab as much as we can possibly want, or as much as we need, before sort of pushing it back down. Again, a lot of people I mean, coming into this and just like, ugh, it looks like a slog. We had the whole sort of argument where everyone's saying no, Fed's not going to raise it. Elon Musk wanted them to lower it for some reason. Again, everything he says, yeah, they've been trapping shorts here. As you can see, the short-term wise trapping shorts, but in terms of the larger sort of pull, they've been sort of grabbing these longs on these top arms. So they've been liquidating them, and they've been holding up into this high. So they've been trapping shorts. So if they liquidate their shorts prior to the news announcement, again, we've got it's 2 o'clock, so it's what, 1400. You've got 1400 here, 1400 here. If they go up prior to 1400, we'll sort of slam it back down and let them feel a world of hurt. Alternatively, it could just be up, get rid of shorts, go down, get rid of longs, go back up, because we get good we have good numbers at the end of the day, where we have I think it's a closed door meeting anyhow. Actually no, it's economic projections, so, and the conference is in the half hour, so we have a half hour of potential directional move from this 2 o'clock announcement. Then on the half hour we can potentially look for what do you call again? Maybe reverse as they come out and say, oh, don't worry about the numbers, oh no, they don't mean anything, it's all FOMO, hodl. I don't know, whatever they say. But if UK can set the tone, I mean, UK usually just follows New York for the most part, so since they're sort of already showing and showcases that their inflation rate is higher month on month and year on year, you'd call it and say, okay, you know what, US is probably doing probably gonna have worse off numbers today, because I mean, they're also forecasting a 25 basis point rise for the interest rate decision, so I don't think they're going to get that either, because That's a oof right there. That comes tomorrow. That's gonna be another fun day. Because I mean, we all need to sort of curb the sort of growing sort of disparity from living wages to actual sort of yeah, from wages to actual livable wages. Again, most people are having sort of and finding it hard to sort of live because the cost of everything's going up. So it's something that they want to curb as soon as possible because not many people survive in this sort of environment. Depends on how smart you are, I guess. If you look at yesterday on sort of ES and SPY, oh, nice little update. Just sort of consolidate upwards. Sort of grabbed here, consolidate upwards, ended the day nice and even here. You can see where it ended, about sort of let's just say 4,000 even. SPY ends up gapping up to meet that. So again, we talked about how if it didn't gap up, if it didn't sort of come up and meet itself up here, we sort of run the risk of sort of having a larger disparity. So we finally got those ETF traders to deposit their funds. So the funds are now secured in my bank. So we might get another gap up again. We're just coming to that resistant territory here with SPY. So we're sort of looking at that and saying, we're at these highs already. We spent the day just making sure we're not getting too many people entered into sort of a longer term long where they have higher level stops. We're just trying to get short term shorts and to grab them out on a potential upswing. Again, just slow builds up here. You can see that's going to be the consensus of today's video. Just slow builds up for the interest rate announcement at 1400. So once we get that interest rate announcement, it's going to be glorious, mate. 2 days of waiting will finally flesh out. Let's see in the interim, do we have anything else? No, just something from Canada. Again, we don't really, it's made up place, we don't really look at it. 1030 for crude oil. We haven't looked at oil in a while. Why not? Let's look at oil. Oil fell down again. That was sort of the consensus last time we looked at it. But falling this far down, oh, that's unwarranted, mate. What you do? Sorry, I'm trying to be a funny guy, but I'm not really a funny guy. Yeah, still within sort of a structure here, so not really falling too far gone. I mean, if you grab these sort of this area here where we have that split in that bar, but we have the previous area of volumes, and this just collecting shorts. Come back to here, you can probably see similar sort of things happen here where it just grabs short. So maybe we see oil try escape upwards, but again, it could just slide down, which would be nice. No, not really, would it? Depends on who you ask, I guess. Is weekly broken for this? Come on, man. There we go. A weekly that is not broken. Since on the weekly on this, might as well chalk this up, and because I can see that it's already trading at sort of 50% of this area here. There you go, trading at 50% at the high. So look at that and just say, oh yeah, all blimey order. So we just pinned ourselves basically at a bearish sort of area here. So again, this area here is bearish. As long as we sort of keep within here, we can easily sort of slam ourselves down. I don't expect it to go that far down. I'm just saying it's a possibility that we go down. I mean, everything's opening red currently. I mean, prior to sort of anything else, it's always nice. I mean, yesterday it's about how it was just all eyes on. I mean, basically nothing, but still came back down, just took out stops, went high, traded that resistance. Now just trading 50%. Maybe take out these stops here. Again, you got to look at where breakout traders come in. They come in on the line break of 11.8, so they come in here. So we'll get more traders here. We get more liquids here. We'll have stops here for shorts. So breakout traders buy, they liquidate shorts, then we can sort of drop it. So there is some upside. So you got to look at that and just say, okay, cool. We're not expecting just straight down to hell, because we do have 4 hours of trading before an actual announcement comes. Then we have a quick succession of 30 minutes where we have our 2 o'clock and our 2:30 announcement to potentially sort of pivot ourselves into a direction. But other than that, there's nothing really going on. So most of this should be just set up. So again, you're looking at potential setup for either a short or long. And again, those are discussed in terms of if we're going high, if we're looking like we're trapping shorts, if we're trying to grab premiums off the market, if we're liquidating shorts out at these highs here, that's your short signal. If we're doing the inverse, where we're trading lower, everyone's sort of in the dumps, everyone's just short bonanza, then we're looking to do the opposite. But majority of the newer traders are long that are still within the market, because we've been going higher than we have been going lower, so the shorts have been sort of struggling, but the longs have been having sort of free reign to sort of relax for the most part. I mean, there have been cases where they just instantly been punished, but neither that is something that you want to sort of worry in terms of they're still in the market essentially, and they still sort of have the ability to get liquidated. So you're probably looking for them to rise it. Once they rise it, you're looking for them to drop the base. We'll look at Ethereum before I forget. On the daily, just came out, filled a gap again. Looked at this as a double top. Did sort of work out. I mean, again, another sort of double top here where we're just trapping longs. So we do have that buffer again, just a higher level of resistance up top where we could just slam everything here. And we know that retail traders will try breakout trade here. And if you go down to lower time frames, you look at that in a more sort of redeeming light. So just grab it like this. Essentially, that would be where retail traders were trading in. Anytime we poked ahead, we just trapped and sort of slammed back down. Actually, let me switch back to body view so we can grab the bodies instead of grabbing thin air. There you go. There's your bodies here. So I think that would be a lot more better in terms of identifying sort of traders. There we go. So we know that anytime we come up here, we're just trapping. We just trapped. Again, pinned to here. So as soon as we escape this, people will look to this and say, oh yeah, let's trade that. That looks good. And it's a small sort of variance where people, new traders in, so they might come in here, they might come in just higher, but ultimately we're looking for them to come in to get liquid, to push out liquidations. Again, it should be very easy to do. I mean, liquidations just here, so they just need to push the market here. The liquidations will carry the rest forward and push it a lot higher. And that goes with most things that are looking like this. Again, you just got to look at where retail will enter, where volume will come in, and the rest you just look at Bookmap to see if it did come in. because again, it's all potential unless it's actualized. So it's only actualized when you actually see those bids come in, and you can't see them on the candles, so you just see it on Bookmap. Say, yeah, my confirmation bias is correct. Blah de blah de blah. On to the next one. Likewise with Bitcoin, you have that same higher level area that we could stretch our wings to, again, if we're sort of feeling frisky, but we're just seeing that bodies, you're seeing those sort of collection of 4-hour candles here. So I mean, we'll do that on trading view. There's less mess on that. There we go. You can see here. Check the fractal trendline indicator on Spider. Okay. Sure. Are you using Trend Spider now? How are you finding it? So you can see that area here, small little buffer, but generally closes coming in here, coming below here, just nice and even on that sort of territory. And that just shows that there's volume to be had at this area, and there's volume to be kept at this area, so be it trapped. Fractal change lines. I think I've seen it. Ooh, colorful. Any particular settings? Go to the owl. So I think it's mostly flat. There we go. And you can see that's your trend lines where I think most people will look to and just say, push, bye, FOMO, hodl, whatever. Almost for 1 year, but I'm disappointed. Yeah. If you're disappointed, just cancel it. Then before you cancel, they'll give you 50% off. And it works out cheaper than TradingView. I mean, for the feature set that I use for it, I mean, I only ever use raindrops and these here. Your other data points does its purpose, but I know there's a lot of improvements to be had. Try levy your disappointments on their forum, because levying always works. Still waiting for it to break. I mean, it's collecting longs, which is always nice, but we want to see it break. I don't know. Actually, I don't think we want it to break this early on, because again, like I said, we do have 4 hours, so it could stay stagnant and sort of be dormant for that 4 hours and just trade that. I'll stick to making some cool stuff recently. Yeah, they have. I think. Do you know what? I think the speed of TradingView speed is a lot higher because they got a better community. And they have a better community because they're first one, so it's just like, okay, chicken before the egg sort of scenario where one can't get TrendSpider can't get ahead because it doesn't have a community making all the scripts for it and all the ideas, because most of the TradingView stuff is done by the community, and TradingView just goes to them and say, yeah, can we feature that? That looks cool. So like most of the new stuff is done by creators, which is TrendSpider is still struggling to release their custom scripts. Because I know it's coming, because it's in beta. I have access to the beta, but it's still a work in progress. Treasury again, it's considering yesterday went high. I mean, again, we're at this area here. We want it to go down, and that's what we want to curb this. this banking crisis, this banking drop did curb it a bit, but pushing down. But it's supposed to get lack of scripted since but nothing. Yeah, I know it's nothing. So I think, but then again, you got like I think it's just one guy working on it, like or at least that's why I had contact. I only had contact. There was only one guy from the looks of it. I feel sorry for him. Oh, I guess a very small team though. It's a relatively small company anyhow. Oh, we're going up. Oh, we got some movement. Oh. Euro. There we go, Euro. I mean, it should take a hit today. Actually, you know, why haven't we been looking at this? Because this will tell us some nice things. Let's see. You can see that pool of sort of shorts that entered in on that sort of break. I mean, they entered in here as well. You can see sort of the volume just being sort of accumulated here. They got pushed. Why? Okay, let's see. If the US looks stronger, it goes down. If the US looks weaker, it goes up. So maybe you can take it to up here. Maybe have that, but still, why? Generally, just wait for it to be at a high here, then just go the opposite direction. Because you're coming in at 2 o'clock. This US, whatever prints in the US will affect it. Because we'll probably need to look at the Dixie. Again, Dixie is not in too bad of a position, relatively speaking. If we can get a stronger dollar out, I mean, it all depends on the power of the dollar, I guess. I mean, if we just come in here and we fall, then Euro USD looks a lot stronger. If we end up printing a stronger dollar out of it somehow, out of magic, we can print a stronger dollar out of today, then we're going to end up seeing the charts go down. But yeah, I mean, it's not generally too bad to say long, but I don't know how much breathity you're going to get out of it, because after the fact, you got Thursday, which is another news day, which would be the no, it's not. No. Jobless claims, but I mean, it's more for UK, so that's fine. Not Thursday. No. Okay, no, shit. It looks like we're in clear straits after Wednesday, I guess. I don't know. I just feel, I'm always apprehensive, especially at these highs here. Just sort of telling that something might sort of go down. Nice little short throw M. I mean, if we support here, maybe go long, but again, we need to look at sort of it's more close sort of relation to sort of the same thing that we're doing was Bitcoin and everything. Just see how the chart's moving prior to 2 o'clock. If it's tending downwards, if it's looking like there's a weak dollar, then it's sort of not too bad. If we get a stronger dollar, I don't know if we get a stronger dollar out today, but still, if there's a miracle and the stars align, get a stronger dollar, then we go down. But still, so I mean, relative to everything else, yeah, it shouldn't be too bad. Actually, let me see if that's the case with pound dollar. Yeah, it's relatively the same case for the pound dollar. So, I mean, unless everything just looks weak because because of the what's it called again? Because of the announcements, everything just like, oh no, market's gonna everything just go down, just sell it. But no, I mean, well, I mean, still have some hope here. I guess we're at basically a razor knife where we can just I mean, we're at this weekly area here, so 10 downwards, collecting some shorts. We can easily trade both sides, so most likely might get whipsaw out of it. But I guess I mean, doesn't look all too bad for some, at least some short-term sort of high move. I mean, ever since September, ever since this, pound's just going only up. Hey, it's just, I even subscribed to the OnlyFans account. Sorry, that was gratuitous. Gold came back down to that support level. I mean, everything's at a place where it can make a decision to go up or down, so it's putting itself in quite predicament for us. Yeah, they basically said, yeah, they said just to stream on Bookmap. I was like, okay. It's because it means less work for me. It's streaming on Bookmap, YouTube, and the Discord. I'd recommend just people go on YouTube because you can always rewind, slow it down. But it is what it is. I mean, we're probably expecting gold to at least try and make some rises. People just FOMO out of everything else and just rush into gold. I mean, we could get something like this where everything goes down, slams into this, everything goes back down. Everyone's out. Just quick flush of the system, or we just go up higher. It's a very, I don't know, it's a very sort of hard to sort of give answers this early on, because we don't know what an hour from now is going to look like. We don't know what 2 hours now, how far they're going to set up, or how far they sort of lend itself. And this is why you should catch the later streams that Bookmap do. They do the other streams with other people, so they'll give you that insight if you're stuck during the trading day. That's if you can. Because right now is time to just be looking at sort of news and just setting up, sort of making a plan for today. But it's Fed's decision day, yes. This ain't no falling around. Why is that highlighted? Okay, that's why it's highlighted, because it sends me out. Oh, okay. I have 3 more times. Stop making. What? Oh, it's so tight. Yeah. It's the first time in a long time the FOMC has a real decision to make. Yes. I mean, they've had lots of other decisions to make, but it's just they've fumbled it. So hopefully they don't fumble it. How do you open this in a new tab? There we go. Open this in a new tab. Ah, yes, I love these pixels. I love these pixels. So great. What am I looking at anyhow? Standard and Poor. Bitrate. Perfect. OTM fund strats. Okay. Let's see. It takes the healthcare. Oh, healthcare. So it's a ratio that I'm looking at. Make it visible then. Don't hide it behind your pixels. Did not prepare for an interest rate increase cycle. Another increase in the near term aggressive aggravates the problems at the bank. yeah, you know what? Let them collapse, but this time don't bail them out. Actually, no. You know what? At the end of the day, the consumers end up getting more hurt. Like, see, that's the funny thing. Like, regardless if the government help or not, the consumers get hurt. It's just like the US is built in a way where it's just designed to just screw over the end user all the time. It's a great system. Softer stock futures indicate investors are a bit on edge knife. Yeah, we talked about that. It's true. Everything's sort of teetering. You got a fine line between either going long or short, making it pretty hard for most traders, I think. But I think most of that should clear up the later we go on. Again, it's early times, it's early morning. We're looking at this. Following the first back-to-back gains, yeah, some recent market upheavals began. There's nothing like a banking crisis to kickstart an equity rally. The transitions. But there's nothing to say though. What am I gonna say? Everything I can say in less words. It's called being effective. Oh, cool. This is something interesting. We're finally getting choked. Finally choking this. That's the thing. I don't know. Because this is not trading hour. This is preparation hour. Getting some sales here, getting some instant shorts, but I don't think we're going to go anywhere with this, at least sort of to the downside. We're just sort of trying to see how many shorts we can get to try and warrant this, because we were up here for a long time and didn't really get too much long out of it. But at the same time, it's fine. We're just looking for it to try and find some shorts here. We'll remove this sort of wall. Once they remove this sort of pressure, we can sort of come back up, essentially. Back to the news. Onto our call of the day, which seems to be some silvery linings out there via one sector that few may be paying attention to right now. In a note to clients, Fund Strats head technologist Mark Newton says healthcare suddenly came back to life, a good sign for the broader market. Soon I'll get Elon's brain implants so you won't even use words more effective. Man, I won't trust that man with a paper bag. What do you think I'll let him poke around in my head for? Let's see. Quick question for you. Are you guys vaccinated? That's the thing. I'm still not vaccinated. It's not that I don't have trust for the government on or not. It's just I just haven't found the need to get vaccinated. At the same time, it feels good for it. I'm all for vaccines, but I know they're useful. But I mean, if I have no use for it, I have no use for it. Before we get to that, the truth moment, as it lies between blah da da or 3-6 highs, he said. Yeah. Okay, that's I mean, let's see if I can figure out the charts that he's trying to show. I always forget the healthcare ticker. That's tech. Two more rallies. Dig. Healthcare. There we go. Don't really look at healthcare too much. Let's see. Relative performance of healthcare went considering relative SPY. I mean, yeah, it could see some rally. I mean, it's if you look at sort of sector map. Oh, God, I tried you. I didn't like you. Isn't though. is, and the worst stocks right now is sort of utilities, which is how are they failing? They legitimately have monopolies and duopolies and are strangleholding customers. How are they doing bad? I don't understand. Go away. This I expect it to be a lot worse. I mean, yeah, it's trading on the lower bounds. Makes sense. Consumer staples, tobacco's down. Oh my god, no. Healthcare wise, healthcare technology is down, so take this down in general for healthcare. Tools and services, trading high. Interesting. It's just a nice little glance down. I mean, you guys can figure out what to do because this is nothing. I'm too uninformed to get into healthcare, and I know I'm too uninformed, so I don't bother with it. It's just nice to look at. If you want to get into healthcare, I'd suggest learning biochemistry. How to read reports. It's a lot of boring and tedium. Ooh, US dollar risk on. Oh yeah. Everyone's risk off on everything. Ah, oh, so nice. I mean, there's nothing really interesting, I don't think, in this article that we haven't sort of covered before. We're just exciting in wasting time. Show firm commitment to getting inflation down. Oh, what's this? Does this work?
Fed's forecasts seem diverging from market over future path of interest rates. By Greg Robb. March 21st, 2023, 4:05 p.m. Eastern Time. The Federal Reserve is expected to use its monetary policy decisions on Wednesday to send a message that the economic outlook remains strong enough to handle further interest rate hikes despite woes in the banking sector. This market-affirming message, along with remarks stressing that the banking system is sound and the Fed is ready to provide liquidity, will be aimed at bolstering confidence. So far, so good. But the Fed also has to provide its forecast of the future path of interest rate hikes, and these might be hard for the market to digest. The risk is the associated dot plot will be a little hawkish, said Vince Reinhart, chief economist at Dreyfus and Mellon.
For those who don't know what hawkish is, essentially the equivalent of saying bearish. Dovish is bullish. So it would mean they sort of will be tightening and stuff like that. So I mean, we'll fall in line to what we're seeing today and stuff like that. If we're saying it's gonna be hawkish, it's gonna collapse us.
That's because the Fed's forecast will likely show a stark difference from the market's views. The Fed's so-called dot plot will likely stick to its forecast endpoint of rates at 5.1%, which implies one more rate hike in May, but it could raise the endpoint to 5.75%.
Yeah, so this was discussing in terms of charts and showing like increasingly more sort of higher sort of points. I mean, the forecast, our consensus rather is 0.5, which is 25 basis points, but they're saying 5.1 or even 5.37, which will be significantly higher. If they're plotting for that, then it would not collapse, but it would sort of hammer fist everything down.
In either case, the Fed is not expected to forecast any rate cuts this year. The market is barely pricing in a May hike, but then the differences set in. Market pricing implies a rate cut as soon as June, with rates falling to 4.25% to 4.5% by year end.
See, that's the thing. Like, that's really hard to say. Like, oh, okay, cool. My market's pricing in this ahead of that. I mean, if we look at SPY, let's look at SPY. Why not? Let's play some I Spy. Let's see. We've been going higher. Everyone's like, oh no, it's pricing in so blah blah blah. If it it's good numbers, then they forget. Like, I mean, if we go down here, I mean, we make our way all the way down. I mean, June is all the way down here. It takes time. I mean, if we reach here by then we start getting that. Oh yeah, we start easing up on the pedal. Then we can probably do that. Then say, oh no, the high. Right now we only can say for certain that there's a potential sort of rate hike, but I don't think it's sort of pricing in that rate drop until we sort of see closer, essentially. But in terms of, I mean, we can always look at seasonality. We always love that here. Let's change January. Worst week. No surprise there. We recover a bit here. Then come Jan again, come June, it's again another sort of quarter changeover. Get more worse off. Look a lot better. Then get worse off again. Then much better. So you gotta just trade with the ebbs and flows. So again, yeah, probably gonna slam a bit higher. But I don't know about
Economists don't think the market will be convinced. It is highly doubtful that these dots are going to reverse the tide of rate cut expectations that are currently prices into the front end of the market, but policymakers are going to use the dots to affirm getting inflation back down to 2%, said Aneta Markovska, economist at Jefferies, in a note to clients. That's okay with the Fed chair, Reinhardt said. Powell will try to sweeten the bitter message of more rate hikes by not trying to convince the market that it is correct. That passive strategy was also in evidence at Powell's last press conference.
That's also known as gaslighting. No, market's not correct. Please, guys, it's not correct. Okay, you're wrong. No, I will convince you that you are wrong. The market is.
February, Reinhardt said. At that meeting, Powell was pressed on the Fed's views of higher rates for longer and replied, in essence, this is our forecast. I don't quite get why you think we're going to ease so fast, Reinhardt said. In the next 6 weeks, the data came to him and the higher for longer rate strategy was priced in until the collapse of Silicon Valley Bank earlier this month, Reinhardt said. It would hurt the economy if the market moved quickly to adopt Powell's views, Reinhardt said. If markets snap to where the Fed is, that would be a big tightening move, he said. So Powell will tell the market what he intends to do and will let time arbitrate who is right, he said. Avery Schenfeld, chief economist at CIBC Capital Markets, said investors might not be pricing in strong odds of modest rate cuts this fall. Instead, one can think of a world in which everyone's base case is that the Fed hikes 1 or 2 times and then stays on hold for a couple of quarters, but that there's a non-negligible probability that the economy goes into a tailspin and requires a major tumble in interest rates, he said. That's not unreasonable given the fog we're operating in today, but if the fog clears as we expect, bond yields will head higher as the rate cut story gets pushed into 2024, Schenfeld added.
That's an interesting story. Again, finding that word, because it used to not work for me. I don't know why Microsoft doing Microsoft things. But interesting sort of, and I think most of that is sort of not too wrong. So it's nice little information to have for you guys. Let's see what we got. Market going to tailspin. Oh, yeesh. If another bank collapses, then yeah, then the government will be forced to bail out. Then it'll just be constant sort of downward spiral, and it'll just be another sort of it'll be 2008 again, basically, which is nice. And then we can just pick stuff up for cheap. Then just actually, at least I can, because I can just come from the UK to the US, pick up some cheap stuff up. Yeah, and another thing is, how will the broader populace react to it? Because right now you see them getting riled up about the smallest of things, and there you go, that wall cleared up, as you can see, then we're free to move higher. Simple as that. See, no rocket science, no. Yeah, so the general populace, like, they'll sort of riot, they'll cause more issues, more damages. Gotta think about that, because we're a lot more rioty and a lot more looting, that more lootable, like the US especially, they're more likely to cause major catastrophes if there's another sort of crisis. Because we're dealing with two different, essentially two different generations. Jesus, it's been that long. those who are kids are now adults. And then the younger generations just, as the kids will say, wilding. They just they'll just react to the smallest of things and blow out and make a mountain out of it. And you gotta see, like, okay, what will they do if we get into another crisis? Because we already saw that whole toilet paper fiasco, and the gas fiasco about people loading gasoline into the trucks. So petrol. Ooh, we're climbing up high. This is what we wanted. Come on, go up higher. Go up higher. Not really going too far high. Just sort of trading sort of London's high here. I mean, London sort of set its own way. Just gave a nice little double bottom to push up higher. Again, we're just trying to capture these longs. We're just trying to capture these guys. Even if it's a nice little double top like this, we're just trying to capture them at 2 o'clock to then try come down. That's the main thing to do. You're trying to see whom actually no, it's who they're trying to get. So if they're trying to capture longs, they'll go high. If they're trying to capture shorts, they'll go low. And your ultimate outcome will be the inverse of who they're trying to capture. Because again, the market moves in the opposite direction of the majority of the herd, because that's where the money is made, in the opposite direction. It's slow winding, so I mean, you can see this high here. I mean, it's right the same. You can probably look for a double bottom. If you get a short throw again, your support, I mean, your split comes around a bit lower. So I mean, if you get a traps a bit higher, then we'll just sort of say, okay, they're keeping within line. They're trying to reach this higher much earlier on, trying to sort of push for that sort of market to go up high. And again, we see those shorts here, so that's where they may potentially try and capture more shorts if they try and push for higher later on, or if they're trying to get a nice little double bottom after a little break. But if they're not, they're just gonna keep pushing until 10 o'clock. It slams it down, then we get something out of it. But ultimately, we'll have more time. Grab these shorts. I guess you can sort of always scale in if you're sort of unsure, but again, you have time, so don't worry. Why does it open that? I'll listen to it when I'm off stream, because I don't know if it's copyrighted or not. Ooh, Nike doing worse? Ugh. Oh no. Oh no. Oh, so sad. Oh no. Oh no. Oh, it's an uncertain Bank of England decision made almost a log after UK inflation data came out and correctly hot, and the odds of quarter-point rate hike to moved from 70% data blah blah on Wednesday, year on year in February. The gilt, gilt's rising. I mean, it's back, yeah, it's a British pound jumped from blah blah blah. It was first upward move since October when inflation ran a dip, 11.1% dip. Such a weird D. No, that's a clip. Unexpected re-acceleration in inflation, despite cumulative near minus 100 basis point monetary tightening over the past 18 months, will not be welcomed by policymakers. Yeah. Decisions when deciding appropriate levels of bank rates, MPC will have to assess which is the lesser of two evils: risk of inflation being higher for longer, or current threat to financial stabilities from rapid evolving fears of a banking crisis. this is more short term, so I think they focus on short term. So they try to fix this because the risk of inflation being high for long, I don't think it concerns them. And I mean, at some point, I think it just becomes standardized, and they'll drop it. They'll drop it later. That's just mañana. Okay, I've officially run out more things to say, and I've more gibberish to say. So I'll probably leave you guys here. Hopefully you guys know what you guys are looking for today. Again, it should be a relatively simple sort of do the opposite. You make sure you pay attention to 2 times. Ideally set an alarm for those times or a minute before, as these are potentially where you may see reverse market reverse on you. Again, 30 minutes, so very small gap you have between the two. Probably decide the outcome of the market for the next couple of weeks coming up. So it's very important that we sort of keep that. And we already knew. We know inflation is a bit higher. We know that UK is probably going to raise their interest rates tomorrow morning. So we're probably looking at US to do the same thing. So again, I'm leaning towards push down. Okay. Difference between loading up BTUSD multibook versus spot and perpetual. So firstly, I would say not to use spot or perpetual. Use Binance as a pure data point. If you're, again, or use your exchange. Like if you're not trading on Binance and you want to sort of trade on Bookmap, just use Binance as a data point, and then execute trades on another ticker. Just because, and then here's the thing, like it's a lot cleaner data essentially. If you set, because it gets a bit messy when you start getting into multi-book, because walls start to look a bit funny. Things are not as clear cut as they would seem. But essentially the difference is it's just how they're made up. So spot will always just be your I think Binance, or your major sort of volume sort of dictating things. And I think for multi-book, spot is a lot better. But for perpetuals, nah, that ain't it, chief. It ain't it. I think it got a bit better with the fall of FTX, but again, Bybit's not too good in terms of being a good data provider. Yeah. So again, if you're gonna use multi-book, just stick to spot data and use Binance futures, because as you can see, these walls are really nice. Just learn to sort of properly filter out your percentages, manual smoothing if you need to be. Make sure your tick size is correct, because that will provide you smoothing without necessarily having smoothing. And find out what trader you are, so then you can figure out what tick size you need. Again, I use 10 tick size, because again, 10 seems like the 10 seems like the best sort of option to sort of try and grab tick size at, because it smooths out but doesn't smooth it out to the point where everything is just one conglomerated wall. So it gives you blockier walls when you start entering. And even if I want to make this blockier, I can just go into manual and just turn that down. Again, everything sort of dial it into your preference essentially. Now I can see what everything is, but I want to collect some walls together because I want to clear some of the noise. But the main thing is, with crypto, you want to get rid of the small fishes, because if I have this one, it just looks like, oh yeah, there's a lot of bids everywhere, but I just want to pay attention to the main people. Icebergs that you can see without having all the bids on, because you can see the changes or the absorption rates happening. But the practical difference is this: you look at them in totally different sort of ways. One will be just sort of okay, shorts liquidate. One's for shorts and liquidations. Spots you look at for accumulations and sort of large sort of additions. So they won't be read exactly the same. You got to understand the purposes behind each one. So purposes for futures is you can't collect more of an equity, or you can't have more of a share because you essentially are just trading on futures. So it's just there to be for making money. But spot, you start owning the underlying assets, so you start owning the share. So in spot, you start looking at the accumulations, and the thing with exchange, most large people are just cross exchange, so sometimes you get those bids entered in twice. So it can so for multi-book, spot can be helpful, but futures, it's unless data providers get fixed up or they become unified where they're not just a bunch of garbage being spat out, it's just too much mess, and it just gives you inconsistent data points, and it gives you too much to decode. Whilst if you look at Binance futures as a data set, it's a lot easier to decode, as there's a lot less noise, and it still gives you the same sort of ability to understand sort of the market. But again, you can look at Binance futures and spot and just forego looking at what do you call it again, multi-book entirely. Again, just got to understand, anytime you look at spot, you're just looking at potential accumulation distributions, because again, it's just all about accumulating shares for Bitcoin versus spot futures, which is just the addition and subtraction of money, which is just how much money can I make out of falls today, plain and simple. So you'd look at them totally separate. So you look at down move, it's like, okay, they're letting it fall down. Is this caused by massive panic as people sell off shares, and are those shares being eaten up by someone else in a long-term sort of distribution cycle, not accumulation cycle? And same thing said, are they letting people buy it up, or is futures carrying the market upwards? So it's nice to have a look at and compare both markets, and I used to do that from time to time, but again, I just found that we're just trading short term, so most people are not interested in sort of long term and don't have the attention span to sit here and listen to me, essentially. But market rising, again, nothing out of the ordinary. We're looking for it to rise anyhow, sort of satiate and warrant people going long here. So maybe they're just clearing out the liquidity again. We still have the potential to revisit this as a nice little midpoint here for us before we hit a double top. But again, before 1400 and 1430, nothing's really set in stone, but you should get your telltale signs of what they're planning to do at those times. Here right now, they are adding new longs, trying to get rid of the shorts, which means that majority my decisions probably for a higher sort of level of rate hikes, so they can grab all this liquidity when they just move down with relative ease. Because on those news announcements, you see all the major players remove their bids and just let it drop, let everyone who's not in the know just get hammered. Okay, that's all my time for today. Thank you guys so much for coming. Again, you can catch the replays on YouTube if you want to do so. Again, next person's on in I think half hour, so you'll have him for 10 o'clock. And again, you guys know how much I like that 10 o'clock instead of that 9:30 for trading. So watch how retail traders trade it, and make sure to watch out for those retail traps that we talked about those breakouts. See where they are, see if you get those volumes being added at those retail traps. If not, they'll probably rise it until they themselves to grab those liquidities that were just higher. Other than that, that's pretty much all I got for today. Thank you guys so much for coming. Have a lovely day, and I will catch you guys tomorrow. Try not to get hurt too much today. That's my main advice. Try not to get hurt too much. And again, just do the opposite. 95% of the time, it works 10% of the time. Peace.